Hi, everyone. Welcome to our event on venture flows. If you are in the West Coast, like the three of us are, good morning. We have got our coffee. You've hopefully got your coffee. I've had about one sip, so I'll become progressively more awake as the hour goes on. For fans of these events, you'll be happy to know my cats are barricaded in the next room, and over the next hour, you will see them break through that door and progressively take over this space. Um, I am joined by two of our favorite emerging fund managers, two fund managers in one incredible fund. They are the dynamic duo, the Wonder Twins of Star Chain Ventures. They are Jordan Woods and Radhika Iyengar. We are going to be talking about venture flows, the way venture is flowing around the ecosystem, and where you are, they are, everyone is trying to reach out and grab a tiny piece of it. And tiny is relative because $1 million is not tiny for anyone. Hundreds of thousands of dollars is not tiny. But in the grand scheme of venture capital today, the funds in our universe are strangely enough comparatively tiny when you're talking about the Death Star of some of these things that used to be called venture capital funds. We're going to get into everything. I couple notes of housekeeping before we get going. We are going to be talking about everything from venture capital funds to deals to LPs. We're going to be talking about the whole ecosystem. Any questions you have, put them in the Q&A, and I will make sure that we get to them towards the end of the conversation. I want to let a couple things. If you are already in our ecosystem, if you are doing an emerging fund, we want to make sure that you answer our survey. It's on the trends for next year, what you expect to see. We hope that you have answers that have something to do with anything other than AI. We're sure that you have many things to say about AI. This is a massive survey that we do. We do a lot of research around it. It dictates where we put a lot of our own resources in terms of our research budget, in terms of where we're getting speakers for events. It's where we know what you're interested in and how we can support you through the year. So it's really important that you go and fill out the survey so that we know where you think the industry is going and we can best support you. We are here to give picks and shovels to you guys and support you in the ecosystem. So go fill out that survey. And last but not least, we have just started cohort 19. It is a very eager cohort. Adeo has said is the chattiest cohort. They are using AI tools like crazy, but obviously missing human companionship because they're chatting in the Slack groups more than ever before. They're loving the community. And if that all sounds appealing to you, the applications for cohort 20 have opened up. So if anything you hear during this discussion makes you think, I want to be in on that venture flowing action, go to Go VC Lab and check out cohort 20 and apply. The theme of cohort 20 is actually going to be doing even more than ever with AI as your co-founder, as your admin, as your associate. We have incredible agentic AI tools that really help you do more faster as an emerging manager. All right, let's get to the conversation. Let me get more of this coffee. I'm struggling. Okay, let's get into it, guys. Y'all have such a cool story as a fund. And, one of the things let's talk about a little bit of your story first, and how you got to this place. Y'all have such a cool partnership. You've known each other for a long time. You've worked together for a long time. You've been so passionate about so many of the innovative spaces and technology and founders that you've worked with. And, one of the most interesting things is that, over the last decade or so, you've thought about starting a fund several times. You've kind of gotten like halfway down the road and then decided not to. What was it where you finally thought now is the right time?
Yeah. I think timing. Timing is everything. Timing in the LP circles, timing in the markets, and that was actually a big trigger. And Jordan, you can talk a little bit more about the timing in the markets, but timing was everything for us, and also alignment. And I think with VC Lab, I'll unabashedly say that we found our tribe, people who share our values and our ethos, and it's just been such an incredible community to be a part of. So I think finding our tribe was a big part of this particular phase of our journey, and the most successful phase of our journey.
Yeah, I would agree with everything Radhika said, Sarah. Um, like you mentioned, we had been looking at starting a fund for quite a few years, and we kept pulsing the market. And the pulse was really around the timing of the trends that we were excited about. We were excited about AI, obviously. We were excited about blockchain. We were excited about IoT, deep tech. There were a lot of different things, but there was also alignment, and there was also readiness from the market in terms of, what we were interested in. And, a big thing that happened was at the end of last year, Databricks did this huge round, and they raised like $10 billion. And we're very big fans of data intelligence. And data intelligence was something that not a lot of people understood. And so that was really kind of a seminal moment. And so, yeah, it really all of those things together, and VC Lab, helping pull together us with, our ideas, and just made it happen.
All right, so having gotten partway down the aisle with starting a fund several times, what has surprised you in terms of if you had to point to one thing that was easier than you expected about raising a fund, what would it be? If you had to point to one thing that was harder than you expected, what would it be?
I think one thing that was easier was just really the mechanics of, just the fund itself. So um, we have a start fund, and so that really just simplified everything and made it so that we could really just focus on, founders. We could just focus on, you know, LPs. So all of the mechanics behind the fund itself, also, the process for what you go through in terms of deal memos, et cetera, we had been doing it for over a decade, right? And we were just really surprised that everything that we had been doing was really the same as what you do, you know, in the fund. So I think those aspects were very straightforward. Radhika, did you want to talk about the things that we found more complicated?
Yeah, again, timing with people we're talking to, right? It's a numbers game, really. It is. You've got to be out there, you've got to talk to as many people, reach out through your networks. In some cases, I'd say we were a little early reaching out to some, and we learned that maybe those would be people that we should have phased in a little bit later. So, kind of getting that timing right. But now we're kind of in the groove, and so it's a really good place to be. But I think the lessons, I guess, that we've been experiencing, and it's just putting yourself out 150% every day and just keep going, right? I mean, it's a process, and enjoy the process as much as you can, because it can be somewhat frustrating when things don't move as quickly as you want them to, or they're not ready for you, you're ready for them, that kind of a thing. But that's part of the process too. And so now that things are coalescing at the right time in the right way, we're feeling pretty good right now. So, but it's been definitely a journey this year. Hard to imagine that the year is almost done.
Well,
So
I'd like to
Yeah,
add one more point to that as
yeah.
well, which is that, here in Silicon Valley, there's so much around founders, VCs, and, fundraising, all these types of concepts. So there's like an everyday, right? It's just everybody is constantly talking about these things. Everybody you talk to is kind of an angel, on the side if they're not, doing it full time. So what was surprising was there was a gap between, people really understanding the venture asset class. So I think that I think came as kind of a surprise, right? Because everybody's always talking about venture, everybody's talking about angel, but this idea of venture as an asset class was not really understood as well, even here in Silicon Valley. So I think, I mean, obviously there's a lot of people that do understand it, but it's not like there's so many groups, right? Like there's a million angel groups, right? You can go out, it's like, oh, what are you guys, investing in? I love these startups, and there's like all these different kinds of, angel groups. But I think on the LP side is really just very little, right? And so it's more like informal stuff and people get together and it's like a few friends do things. But it's there's not as much infrastructure. Um, LP Institute's kind of a cool thing. It was really interesting because, there's a whole group of people that all are kind of understanding stuff and it's connected to VC Lab and, that really um, is, a really cool group to interact with.
Yeah, I mean, let's talk about that a little bit more because that is one of the things that's been really interesting to watch from our side as there've been so many things that have changed in the last couple years. And there's so many different factors that have come together all at once. Like in a macro way, we've had this phenomenon where the big funds have gotten so much bigger, and there's been the kind of this hollowing out of the middle, and small funds have gotten smaller. And in some ways, both of these trends have really been pushed and enabled by AI. AI has enabled companies to be able to do more with less so that funds can be smaller. And there's a lot of entrepreneurs who want to raise even less money. This is something that we've seen since the rise of like open source and AWS, and it's sort of continuing with AI. And that's driving funds to be even smaller. But then, on the other hand, there's huge opportunities like building out some of the bigger AI companies and the costs associated with that, defense, robotics. And that's in some ways the justification for some of these funds becoming even larger. And what a lot of LPs are saying they don't have a lot of room for is what's in the middle, which is these mid-sized funds. And so then what you see on either ends of the spectrum is a real shifting landscape in what LPs are. And so you have either these gargantuan plays, or increasingly what you have are these smaller funds. And the smaller funds are playing a really interesting role in the ecosystem because these big funds are so big. They really can't play the role in developing these young companies. I mean, they could essentially go around buying lottery tickets and they can have scouts and they can put in these small deals, but they're not helping develop these companies in a way they used to. They're not really doing venture capital. So increasingly, it's really coming to these small funds. And, what that means is they're really playing an even more interesting role in the ecosystem. And that means LPs in those funds are getting exposure to these companies at the early stages. And because those funds are smaller, a smaller check from LPs can get exposure to the most exciting phase of startups than ever before. And part of that has come down to what y'all referenced with Start Fund, with some of tools like VC Lab and Start Fund, where we've taken out a lot of the costs of building a fund so that managers like you can afford to take smaller checks and it's not cost prohibitive. So suddenly people who were writing angel checks can be investing in funds. So part of what we're seeing is someone who might have spent, $100,000 putting it across several angel funds is now becoming an LP in venture funds for the first time. And as you said, Jordan, that's a new asset class for them. Even if they've been in Silicon Valley and they're an entrepreneur or they've raised venture capital or they're a very sophisticated angel, they've maybe not been an LP before. Is that something that, I mean, we talk to LPs every day. That's a lot of who comes through LP Institute. Is that some of the people that you're talking about investing in your fund, or people that you know personally in your social circle, people in that shift?
Yeah, I think that's a good point you make, Sarah. I mean, I think there's actually room enough for all, interestingly enough, and I think that's been part of this journey as well. Earlier on, I would say that was true, where we were seeing a lot of angels wanting to get into a new asset class, finding it very exciting to be on this side of the venture landscape. But then there's also other veterans that are out there that are looking for unique opportunities. You kind of alluded to this. It's a very different space for mega funds. I think you're talking, especially with most of the folks at VC Lab who come through, specialists, operators, people with deep domain expertise. We certainly fall into that category. And so it's not something that just, you stumble upon necessarily. And I think that there's a whole group of us who are very highly specialized at what we do, great operators at what we do, and are bringing a different category of excellence and caliber to this space. And there is appetite for larger folks, not necessarily the smaller angel folks, but the larger folks who have an appetite to see something different. So we are encountering that more and more these days.
Yeah, I definitely agree with all those points. And I think, there's the institutions, right? There's the fund of funds, there's family offices, there's high net worth, ultra high net worth. There's all these different groups, and the angels, which, are maybe, kind of at the lower end of high net worth in some cases. So there's this whole range, there's like this continuum, right, of people that have different appetite for what they invest in, and they're kind of the largest are, you meet people and they're like, well, I usually invest like 20 million or 15 million into a fund or something like that. And obviously, as a micro, there's no room. It's just too big, right? And so they like to invest in like a fund 14 or a fund 12, if they're just private individual, or maybe they have a family office. If you're talking to institutions, right, they want to see fund families that are like 3, 4, 500 million. And so you can see on the high end, right, they're just really constrained. They can't even talk to you because you just don't even kind of come into the picture as a micro fund. But at the lower end of the spectrum, in terms of those that are looking at the asset class, there's I think a lot of excitement, right? They're kind of seeing it for the first time, and there's so many more, I think, because of VC Lab and other types of programs, there's so many more emerging managers that have these smaller funds. And so what we're seeing is that there's a lot of people who really understand that, yeah, there are smaller funds out there. I know as an entrepreneur and, as, having our own venture lab for many years, usually, we were familiar with funds that were like 50 or 100 million, right? That's usually what you would see, especially in seed, um, and maybe into Series A. But now there's like just a flood of like all these much smaller funds, like Radhika said, which are really have a very specific focus, a lot of expertise, a very special network. And that, I would say, over the last few years is this new phenomenon. But the market in terms of LPs is beginning to understand that. But I think there's also another side, in addition to what Radhika talked about, and really has to do with kind of this ethical base, right? There's a lot of people that are looking out at the technology. I mean, a lot of conferences you go to here in the Valley, and people are super excited about AI, and there's like all this hype, and it's like it's the best thing ever, and it's just going to get better and better and better. And then you go outside Silicon Valley, and there's just fear. There's just like so much fear, right, in the market, and people are just they don't even know how to talk about it because they're so like afraid of like what's going on. And so they're looking for somebody that can help explain it and maybe talk to them about how you can do something that's ethical or safe or something like that. And so there's kind of this real need in the market from a lot of people who are saying, hey, is there some counter stream to what we're seeing in the news?
I'll just
Yeah.
say add to that, Jordan, because just recently we were at the summit, and people were they were actually fearful of AI. There was actual fear in the room, just very uncertain about what that means. And we're presenting a very different take on AI because we actually are very bullish on AI, but saying that it has to be measured because we actually know the state of current technology and how it really can perform on certain levels, but it cannot on others. And it's eyes wide open. And so part of what we're enjoying through this process, Sarah, is educating people on what's real and what's not, and what's hype and what's not. And I think it's that particular perspective is what a lot of investors find exciting, and they have a great appetite to learn more and to feel like, oh wow, we're talking to people who actually have built things with this or understand this. This is not some frothy, I'll get on this frothy bandwagon, and I'm going to be part of this, but it's all froth. So there's what we always advocate for is, real value and real deployments using technology for real purpose. And I think people are looking at that and saying that's unique, that's different.
Mhm. So I know that we want to talk a little bit about, the state of venture in 2025 and going into 2026. And we've gotten a little bit into some of like the macro trends. I like where we were sort of talking about the rise of these funds that are really specialized. Because at the end of the day, really what VCs are selling is money, and it's like money for equity. It's like you all kind of have the same product. And so the differentiation, really is what you're going to be able to do for founders. And, if you're a small fund, especially if you're a first time fund, you've got to have something that really, really is differentiating you. And if you're raising money, you've got to be able to really convince an LP that there's something you're going to be able to do that's really, really different. And increasingly with these small funds, because that's not going to be a huge checkbook and huge reserves, it's really about what you're going to do, to be able to like help people. So what are the things that you're finding that LPs are resonating with, that founders are resonating with? What do they want from investors on both sides of that chain? What do they find credible that is really going to be wanted in the market right now in 2025, that LPs believe founders want, and that founders want on their cap table, that they're going to write a check and they're going to take the check?
Well, I'll say from writing checks, access to really unique knowledge, I think. I'll just say it that way, because there, especially in the space we're in, which is AI and data intelligence, which we're very excited about, and there's so much opportunity, they still don't understand what that really means and how does that affect everyday business. We're playing more on the business side than on the consumer side, but there's still there's an eagerness to find out what it's all about, but saying, I don't know what this is all about. It sounds very uncertain, and I'm a little fearful of it too. So I think that people are hearing a lot of things, seeing a lot of things, but don't really know how to sift the wheat from the chaff. And so talking to people who are very deeply into this space, who've built in this space, I think is refreshing for them. And so many people have come up and said exactly those words. This is so refreshing. This is an amazingly unique kind of perspective. You've actually done things in this. This is not about just jumping on some bandwagon, as we mentioned previously. So I think that's the excitement. And I'll just say briefly for the founder part, value. I think this is a bit old school. We're going back to, I think, roots of the way things were originally done, which was that money is money, but the value you bring with it, which is knowledge and know-how and network and all of the other aspects that are so important for founders. You're not just another number, you're actually people. And this is about, we always talk about team, team, team. Yes, team, team, team on both sides. So I think people make all the difference. And I think when you put people first, even things like AI, which people are afraid of because they think there's going to be displacement of people, saying, well, not really, because there's opportunities that also open up. And we've seen various waves of technology that seem fearful at first, because you go, well, what about that little business that's down the street from me? Are they going to be displaced? And so, yes, to some extent, and no, to some extent. So I think it's knowing what the opportunities are. And I think founders and investors on both sides of the equation are finding that very exciting.
Yeah, and to add to what Radhika is saying, I think there's specialization, but there's also operator. experience, right? So, as I was raising money for my own companies as a founder, you so many times meet people that they don't have any experience in a startup. They never worked in a startup. They don't know anything about what a startup is. They, have, done really well because they invested in a bunch of companies. But you talk to them and you don't really get a sense that they understand your journey. They don't understand what company building is really about. And you really wonder, how did they get so successful? Right? Because like they don't seem to understand what you do or how you operate or what you're thinking about. And occasionally you meet somebody who is like, wow, that person, they totally get it. And if I look back at like the investors that we worked with, they were the ones that really understood what we were doing. They were finishing our sentences, they were telling us how they were going to help us. And we were like, oh my God, that is, the investor for us. And so it's the same thing. I think the corollary to all of these specialized funds is there's a lot of operators that are moving into the market. And a lot of the people that we see as LPs that are excited are also operators and they want to stay close to the best companies. So they're kind of looking, I mean, you can go to accelerators, right? And accelerators are going to have a whole bunch of interesting companies, but you can also go to like specialized VC funds and work with, the portfolio and stuff like that. If you're an operator, you're wanting to work with startups, you want to work with the best startups. That's really a model that has been out there, but there really haven't been so many of these micros for a long time. And now there are. And so there's a lot of operators that are excited about it. When you're an operator and you have the domain expertise that Radhika talked about, and you meet with founders or you have these founder relationships, it's just instant love, right?
It
It's like,
is.
oh man, I need you in my in my on my cap table because I know you, I know what you can do, I know you know this space, you're going to help me in all these different areas. It's just totally, and that's how you can get into closed rounds, right? You get into closed rounds because they're like, wow, why weren't you around 9 months ago? It's like, oh, okay, you didn't have a fund or whatever, right? So that's really excitement, and that's how you get into the best deals. And then everybody likes that, right? And then the operators that are interested in your fund, they're like, wow, you've got these characteristics, we've got a lot of similarities, you understand the journey, you're getting into the best ones. And so that's really another very important component is this operator sense and founder wisdom.
Founder wisdom, exactly. You took the words right out of my head. I was going to say it is founder wisdom. If you've been through this road before, you know where the potholes are, and you've seen, and you may not know this specific top pothole, but you can see enough patterns, and you can, alert the founder saying that's a pothole. You might not look like it, but that's a pothole that's developing right there.
They don't always listen.
They don't always listen, but I
Yeah.
think the best founders do. And I think that's also the other coming back to team. I mean, really aligning with the best people around you is really the best thing you can do as a founder, because you know it's your blue ribbon advisory board. And so I think as people who are investing in companies, you really want to be offering that blue ribbon capacity to any founder you're coming across. And so any good founder will be keeping their eyes open because they know what value that brings. It's not just something that's here and done and it's a transaction and you put money in and boom, you're off to the races. That sounds great, but off to the races is often a really long and windy road, which many of us have been through because we've been founders before. So we know where the potholes are and we can actually point to what's coming around the bend, have seen enough patterns, have seen enough waves of technology to be able to detect what those patterns actually look like, how the playbook has to shift, all of those things that are actually incredibly valuable and very complex.
Yeah, and I mean, you talked about something interesting, Jordan, which is getting into closed rounds. And I mean, that's what the funds that do this successfully do. I mean, that's what a micro fund has to be able to do in order to really like get the momentum, because what gets LPs excited is is deal flow, is really, really good deal flow. That's how you're proving your special sauce. That's how you're proving your thesis. That's the easiest way to start unlocking checks. I mean, we can talk for the next 25 minutes about trends. We can talk about buzzwords. We can talk about what's exciting LPs. We can talk about everything else. But the biggest way to start getting checks if you're raising a fund is to start getting in deals that are hard to get in, right?
Yeah, for
Yeah.
sure.
I think,
And
go ahead, Jordan.
yeah, I think getting into the top deals, but also I think getting into those that are maybe outside of the mainstream, right? Because people people worry about valuation, right? So that's a real issue, right? Especially here in Silicon Valley, a lot of the valuations have kind of skyrocketed. So what we've seen is that there can be trepidation, right? You can get into a deal that is really hot, but people will look at it in terms of other operators or potential LPs, and they'll be like, yeah, but is that the peak, right? Are they going to keep going up, or maybe right now, but what's going to happen over the next 2 to 3 years? Is this bubble going to keep expanding, right? In terms of AI, so I think you've got to kind of have a mix, and the valuations have to be reasonable. It can't just be you're getting into the hot deals. It's got to be, it's a very important deal. It has to be aligned, and it's got to make sense in terms of the upside.
I agree with that, but I will also say that what we've found to be successful so far with us is rigor and discipline in terms of doing our homework. Even if with people we know very well, we don't skip that part. It's incredibly important. We've Jordan, you alluded to this a while back. I mean, one of the surprising things for us when we did VC Lab was that we had always been doing a form of deal memos, because we always peeled back all of the layers and evaluated these companies on many different levels. And so we actually had our own way, a proprietary way of expressing that, even graphically, and looking at the strengths and weaknesses of a particular company. So that same rigor and approach is, I think, incredibly important. So valuations aside, hot deals aside, if in order to build real conviction around something, you have to understand what this company is doing. You have to be able to correctly assess, or as correctly as possible. Nobody has a crystal ball. There's so many macro forces, black swan events, or what have you, that can change the picture of something. It is a dynamic, landscape out there. But fundamentally, you have to believe, and that's where the conviction comes from. Saying you have to believe that this is a potentially a company that is going to outperform. So I think that's the rigor and discipline that we have always looked at, and saying yes, and that was reinforced with VC Lab, and we're continuing today to doing that. So
Well, and Jordan, you raised such a good point. Like, let's talk about what a hot deal is. A hot deal is an OpenAI. OpenAI is a ridiculous valuation. And like at this point, everyone can look at OpenAI and say, like, yeah, they're probably going to be a company that's going to be around. Like that doesn't take as a smart emerging manager to point to. And so then that's just a matter of like who knows who and who can get in. I mean, that might be somewhat interesting, but it's not really. Like why an LP wants to be in a fund like yours or a fund like any VC lab is finding the one they don't know about. Like I've been working on case studies with LPs for the last week, and I will tell, every emerging manager or would be emerging manager that is on this call right now, because I've heard it again and again and again this week. So many family offices have said the biggest unlock, the biggest reason that they started investing in more and more funds at this size is, you're doing the due diligence for us. You are doing essentially like the looking for deals for us. We like investing in these funds because it's getting the distribution for us. It's exactly what you guys said. Like they're specialists, they are digging deep, they understand the space, they're taking us into deeper spaces. And then, when these funds get really excited about a deal, we get to co-invest with them. So they're not looking for someone who can get them in a big oversubscribed round that's already being written about on TechCrunch or The Information. Everyone knows about that deal. So it's not about the hot deal. It's about the deal that people can't get in, that's the closed round, that the people who really know the industry know, but everyone else doesn't know. It's like
Yeah.
the deal that everyone's going to be talking about in 6 months is the deal that you need to take the LP in.
Yeah, I think that's a really important point. And a lot of people, look and say, okay, well, what's your contrarian bet, right? Everybody's kind of going in this direction. There's this herd, right, that's rushing off a cliff, with all this stuff. And yeah, maybe they make money, or maybe, the bubble collapses and everybody gets wiped out. But, what are you doing that's going to be around, right? Because sure, there's this macro trend that everybody can see, like you pointed out. You don't have to be a genius. Everybody knows what the big deals are. I mean, there's a lot of secondaries that people can get into, et cetera. But what are the deals? I mean, there's a lot of research that's done that says that the unknown founders, right? The people that aren't known actually lead to like 90% of the unicorns, right? So a lot of the unicorns are hidden. And so it's like, how do you get into those? And then, if you look at something like an OpenAI, sure, it's got incredibly high valuations, but that's kind of, if you look at the 20 billion initial kind of valuation to the 500 billion now, that's a 25x. So a 25x isn't something that, a small fund is going to get excited about. You really need 100 to 1000x, right? And if you're going to get 100 to 1000x, you have to be able to find something that is hot, but it still has tremendous upside, right, in that 100 to 1000x range, because it's power law, right? And so you're going to be getting into stuff and making bets that other people won't make, and you're going to be betting that you and your capabilities, your network is going to enable those companies to get to that unicorn level. So there's a lot of things that you have to look at in the mix. And to your point, Sarah, it's got to be something that's contrarian. It's out of the scope. Has got to be like, oh wow, I haven't heard of these companies before. Oh, they're doing that well. Oh, are they going to be a unicorn? They will. Okay, wow, that's really exciting.
I'll just add one little thing to this because I think from having been operators and domain experts in this space, and where we play globally as well, we come across so many different rich networks across the globe. I think that puts people like us in unique positions because you're able to really detect where those hidden jewels are. It is a bit like treasure hunting because it's not obvious, right? It's a non-obvious, it's a contrarian obvious. It's obvious to the contrarians, but not obvious to everyone who's playing mainstream. So it can be in a hot area like AI or data intelligence, but it's unearthing those hidden treasures that not everybody has access to or has even an idea that they exist. And so, to your point, Sarah, it's about identifying those deals, which then subsequently become the hot tickets in town because you're driving the momentum forward for something that actually deserves being driven forward, right? So we're not applying this willy-nilly. We're actually applying this with a lot of rigor and discipline, like I mentioned, but it is being able to know where to go look for this treasure, where to go find those hidden jewels. They're not obvious, and most people overlook them very easily.
And just to give another encouragement and shout out for doing our survey, those are the things that we want to unearth that you are all looking for. It's easy to say, what are the themes? AI, block. Oh, really? Wow, thanks. You've woken up, Rip Van Winkle. But like beyond that, like what is everyone looking at? What are you excited about in 2026? That's what we want to understand. So go fill out the survey. All right. One of the things we wanted to talk about in this conversation, and we're gonna do a couple more questions and go to the audience, is the words or phrases that capture the current mood. One of the things that I talked to you guys about last week is, and I think this is so smart. Adeo talks a lot about when you're raising money as a VC, it's really different from when you're raising money as a founder, because when you're pitching as a founder, you've got a product, you're going out to raise money for that product. When you're raising money as a fund, you're a money manager, and it's much more of a dialogue with your LPs than it is, hey, here's my product, and they're like, well, what about this? It's like, no, I've built this biotech thing. Um, And one of the things that I love about your story is you'd mentioned that when you were out there, initially you really heard from a lot of LPs. They felt like really burned. They put a lot of money in this ecosystem and not gotten a lot back. And you were really sensitive to what you heard. And you thought about, like, hey, there are a lot of LPs who put a lot of money in this ecosystem. There's been a liquidity crisis. How are we sensitive to that in the way we've built this fund? So, would love to talk about words and phrases you think capture the current mood, but also kind of specifically what you heard fundraising and how, as managers, you thought, hey, rather than just, yeah, this is what we're hearing, let me keep telling you what we're doing, how on the fly you kind of pivoted a bit and tried to address that and be cognizant of that and really hear LPs.
First of all, I wanted to just allude to what Adeo had said, which was, if you're solving a problem, you go build a company. And if you're solving a problem set, then you go build a fund. And it's absolutely 100% true. I think the problem sets are plenty. There are many problem sets in the world that you can identify, and latching onto one that you think is just going to perform really, really well. I think that's something that we're very cognizant of. And yes, to your point on listening to the pain points that LPs have, which is liquidity. A lot of vintages are still out there and haven't really delivered. And so there's a lot of sensitivity around that. And knowing how to get into those companies that are going to have shorter timelines for exit, improving earlier liquidity, I think is something that we're extremely sensitive to. And we have, a unique space that we're in, which is AI and blockchain. I think that marriage between the two is an exceptionally exciting time. We've talking about timing. I mean, we wrote the book that back in 2019 that kind of lay out our vision on how this technology was going to take shape. And here we are. It's been a ride, and it's six years later, and we kind of predicted that this is the time frame that things would actually start coalescing in terms of market timing. So yeah, there's very unique opportunities that are actually producing earlier liquidity that we're able to access, B, really understand from a technical perspective what that means, and C, being able to get into things that are actually closed. So I mean, there's a lot of good things that actually have to happen all at the same time, but it is something that is making the LP community very excited about.
Yeah, and I think just to add to that, I think different kinds of liquidity, right? So, I mean, a lot of people are familiar with secondaries as a form of liquidity, but if you do AI and blockchain, in some cases, you can have multiple exits for the same company or different asset classes, some that aren't dilutive, right, to the LP and in the equity position. So there's a lot of different, it's a more sophisticated kind of discussion, and it opens people's eyes and they're like, oh, I can have liquidity of different kinds with the same company at different stages, maybe with even different products. And that's a really interesting discussion because I never heard that before. So it's really, having this kind of contrarian view on one hand, and then something that leads to early liquidity and then different kinds of liquidity. So that becomes really interesting because it's like, hey, nobody else is talking about that.
Well, I mean, there's two things that small funds have that are an advantage when it comes to returns. The first is that it is much easier to get a 10x on a small number than a big number. I mean, this is like Doug Leone was famous when he started Sequoia of saying small funds are always going to have bigger returns than big funds. Despite the size of Sequoia's fund, that math still remains math. So that is always going to be an advantage that small funds have. And the other advantage, which is somewhat unique to how venture capital has developed over the last 50 years, is that you have other ways to get liquidity. And so the liquidity crisis that is written about every single day doesn't apply to managers of small funds the same way it applies to managers of big funds. I want to make sure we get to some questions from the audience because we are rapidly getting to the end of the hour, and the three of us could talk for 17 hours. Okay, so we've got just a few, and then I have two more questions. We'll see if we can get to all of them, but I'm going to put everyone else first for once in my life. Okay, so someone is asking, what about your journey to get to your thesis? And what is your secret sauce? We obviously are very careful about not talking about your
Yeah.
thesis, but how did you what was that journey like? Was it difficult for you? How did you think about your secret sauce?
Yeah, I mean, initially, I think we went out with we're AI and blockchain. We really have been since the get-go. But it was definitely, more difficult, I think, in the earlier days than it is now. It's kind of come full circle now. In the earlier days, we were finding a little bit of resistance just with the AI blockchain. I think timing was everything with that, and the market shifted significantly forward for blockchain, and then things just started getting easier. But it's also the AI data intelligence piece, which is very unique. It's not general AI either. It's a very specific segment of AI, and it does involve a fair amount of sophisticated experience and expertise that goes along with that. So I think that that's something that, for us has been a real winner. People are excited. People realize this is a highly performant area of AI. And it's difficult to get into because you may not understand everything either.
Yeah. I mean, to Radhika's point, it really comes to like pulsing the market because there's like what you feel comfortable with, and then there's like what the market is comfortable with, right? So you can say, well, hey, this is what we're going to do, and then the market says, well, we don't care about that or we don't like it. So there's that interplay. I think this really comes down to timing. At the end of the day, what we did is, working together over the last 10 years, we worked with about 25 different companies, right? And those experiences and we can see the full trajectory and we help those companies raise money and do strategy and all kinds of different things. But net, the majority of those that actually did well were in AI data intelligence. And they ended up raising way more than the others, right? There was like around 900 million raised in total. And then there was like 4 billion in exits and value creation for investors. And so it was like, okay, this is our track record. These are the companies that we worked with that have done well. We've proven that this area and us have led to outsized returns. So does this set, resonate with the market? And the market was like, yeah, we like that. You've got the track record for it. You've got the depth. So boom, you can go ahead.
Great. We've got another question about the appetite for investing in venture capital in Africa. I know you guys, I think you're pretty focused on the US, but I know you've also done a lot of work with international founders. Would love to just get a sense
Yeah.
generally on how you're thinking about rest of world right now, how you're seeing trends develop there.
We're very bullish about rest of world. I think it's essential. I just recently gave a keynote, and I opened with the thought that diversity is our greatest strength. And we love immigrant founders. And yes, we're focused on US companies, but if a company is really targeting the US market and is selling here, and this is the big market that they're targeting, it makes a lot of sense for them to be here. But we love immigrant founders. We actually, over the many years that we've worked together, but individually as well. I'm an immigrant myself. I'm bullish about immigrants. So, it's back to the thesis that, or to the idea that great founders come from everywhere. And so I think, Africa is an amazing continent. I grew up in Africa, in Northern Africa. There's so much to offer. The demographics of the youth that is rising in Africa is a real force. And I would love to see, African founders coming over to the US, setting up their companies here in the US to develop something because they're targeting the US market. This is not just again, a haphazard decision to come to the US, but if it is a company that has a particular application that is very relevant here, and we've seen that you can even start in Africa and then move over here at some point and basically flip your headquarters. And we've seen so much of that happen with many global ecosystems. We're very bullish on that.
Yeah, and just to add, in our venture lab, we worked with quite a few African founders, and I think there's really two playbooks, right? One playbook is you're going to do stuff in Africa, and that's your whole approach. And there's been, because we stay close to what's going on, I think there's been a lot of concern in the African ecosystem about VC model, and it's going through a transition, and there's kind of an inflection point going on. So, and there's also a lot of African founders that are, like Radhika said, they're setting up in the US, right? They're setting up as a Delaware C Corp. So I think, you can be an African founder working in Africa, but we found actually the really interesting combination is you use Africa as your test bed, you build stuff for the African market, you build it, and then you bring it to the US, and then you go rest of world, right? So you can kind of start in Africa, bring it to the US, prove it out, and then go global, right? And so I think that is really what we like. And you could do that in a lot of countries and a lot of continents, but I think we're very bullish on that approach, and we're putting our money where our mouth is.
So we've got another question about which types of LPs are most open to emerging managers. I know we talked about the people who are moving sort of from the angel class. We talked about high net worth individuals. I particularly want to be sort of targeted in this question because Jordan, you mentioned both of you mentioned some of like the bigger LPs. What's like the highest you can go? Because there's going to be some, pensions and institutions that just can't do this size. So like what is the highest up you can go institution wise, do you think?
Go ahead, Drew.
Yeah, I would say fund of funds, right? So fund of funds, we can probably do 1 million, as a single investment. Maybe if you push it, 1.5, maybe two at the upper end. But you're not going to do that up front, right? Unless you have some very special relationships or you've, done something before. I think with the model of coming out as an operator, you haven't been a VC usually before, right? I mean, the standard model is you work at a VC at some capacity for 10 years, and then you come out, you have particular relationships, and then maybe you can raise institutional just based on those. But if you're coming in as an operator and you've been in the ecosystem, you typically don't have those relationships. So fund of funds, family offices, but I think family offices is probably more a million, less than 1 million. And then, yeah, Radhika, you'd like to say something too.
Yeah, I agree with that. I think the best type of people are people who are going to be getting your vision. That's a conversation. This is relationship building at its best. It is about people at the end of the day. And even with family offices, fund of funds, it's all relationship. And I'll just say with the fund of funds, even institutionals, you want to start developing those relationships early. And this is a journey that is not a one and done, right? I mean, it is very much, it's going to evolve over time. So these relationships are really important. They do take time. So take time to nurture them. And I think that there's going to be payoff eventually around those.
All right, let's do one more question from the chat as quickly, because we're running out of time. This is someone who's asking about, an accelerator raising a micro fund to co-invest with VCs who are investing in the deals. Do you guys think that's an attractive opportunity for LPs? And I guess beyond this, we've had venture studios. We certainly with Start Fund, there's a lot of people who are, mafias from companies that are looking at doing start funds, accelerators that are looking at doing start funds. Start funds allow you to just spin up funds so quickly and really, really change the model of what can be a venture fund. So given that you're talking to LPs every day, and you had a venture lab yourself, what types of models and different structures do you think are interesting to LPs right now?
That's really complex.
It is
Answer that in
complex.
60
It's not a
seconds.
rapid fire question,
Yeah,
Sarah.
I mean, I
You
think
have 3 minutes. You have 3 minutes. 90 seconds
it
each.
really depends. I think, the venture studio model, there's kind of a lot of negativity around it, unfortunately, just because, I mean, we started really as a venture studio, then had to kind of change and become a venture lab because the name really meant that you were taking 50% or more of a company, and it became almost unfundable. And so I think if you're not doing that, maybe it's going to work. I think really what we've seen as the best model is you actually have a fund and then you spin up, kind of a venture lab or an accelerator for the fund, right? Because now you have a vehicle that you are looking at that to feed into you, and you can and you need some money to operate it and to, give money to the companies, but you can actually fund it and then bring in syndicates to fund it or do SPVs or whatever makes sense if it's off thesis. But but I think we just haven't seen a lot of traction with just venture studios, and I think the accelerator model by itself, sure, it can work, but there's just like so many of them. So you got so much competition. How do you differentiate?
Anything to add, Radhika?
Oh, just yeah, differentiation is key. For me, I think I'll never say that new models are not worth exploring. I think this whole landscape is changing, and if anything, that VC Lab is proving is that new and different is great. So I'm an optimist when it comes to new models, but exploring them and seeing how far you can take it. And at the end of the day, it's execution and execution and execution, which is what we say to our founders. So it comes back to fundamentals at the end of the day, but new models are exciting. I think if there's an opportunity and there's a place for everyone. If you've got a unique way to build it, go do it.
Show you can get into good deals. I mean, I remember when Y Combinator started, people were like, we saw this with Idea Lab, it didn't work. I mean, show you can get into good deals and you can pretty much do anything. See, you did do it. See, I knew you could do it. You answered that question brilliantly in a few minutes. All right, we have got to wrap. Dominica is going to start like shooting daggers through the Zoom screen at me in a moment because we're at 9. If you are at all interested in following in these amazing footsteps and doing your own fund, check out Cohort 20. Please fill out the survey. Also, we just posted on LinkedIn on Adeo's feed an amazing profile of these guys. To learn more about them, go check out Adeo's feed on LinkedIn. You can also follow any of the 3 of us on LinkedIn to just learn more about what we're all seeing in the ecosystem. Follow each other. I know a bunch of people were sharing stuff in the chat. This is all about community. We're all in this game together, and we will see you on the next event. Thank you so much, both of you, for making time from your important journey, raising money, deploying money, making a dent in the starry universe behind you. We appreciate you, and we will see you all at the next Zoom event. Bye,
That's
everyone.
great. Thanks, Sarah. Bye, everyone.